Hey everybody, Smart Silver Stacker here. Welcome to a Sunday live stream. So today we're going to be talking about the BRICS because it looks like further BRICS expansion is inevitable. Earlier this week, we heard that Malaysia is the latest nation to apply to join the BRICS organization. In this video, we're going to be talking why and also the implications that this will have for the US dollar, for gold, for silver, and most importantly, for U.S. debt. So let's get right into it. Today's video is brought to you by SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Check them out with the link down in the description. It's where I buy my gold and silver. So Malaysia has applied to join BRICS. This was following a visit from Sergei Lavrov, the Russian foreign minister. And Beijing, according to this post here from the South China Morning Post, is supporting Malaysia joining the BRICS organization. Now, BRICS has been expanding. We just added Saudi Arabia, the UAE, Egypt, and Iran to their ranks at the last BRICS meeting. But now it looks like, again, further expansion is inevitable. New partners are joining. Chinese Foreign Ministry spokesman said, "We welcome more like-minded partners joining BRICS and working together to make the international order more just and equitable." And I see some folks in the chat there. Hello, welcome to the live stream. Do me a favor, smash that like button. And put some comments in the chat. Always helpful for the algorithm to, engage. So I always appreciate when everybody does that. If you want to support the channel, just participate in the comments and in the chat. So it's looking like they're going to join, and there's a couple reasons for this. Now, this doesn't mean they're going to join right away. They've just applied, and there's been several countries who have applied to join the BRICS organization. But Malaysia has a couple of motivations here. One, Malaysia is a predominantly Muslim nation, I think over 60% of their population. And currently the ongoing war between Israel and Hamas in Gaza, not very popular in the Muslim world, so they're kind of being driven into the opposite camp of the G7 as they perceive things, the U.S. supporting Israel in its war there. Also, though, there's an economic motive here, and that's really the more important thing from my perspective here, from an economic perspective. We already know that Malaysia is interested in de-dollarizing its economy. This is a story from last year regarding the ASEAN nations. That's the Association of Southeast Asia Nations, of which Malaysia is a member. And they had a meeting in Indonesia last March, actually March 2023, so a little over a year ago. But the top of the agenda at this meeting was discussing reducing these nations' dependence on the US dollar, the euro, the yen, and the British pound, and moving to settlement in local currencies. They also planned on implementing a cross-border digital payment system which would allow them to use more local currencies for trade. And they actually reached an agreement on this cooperation back in 2022 between Indonesia, Malaysia, Singapore, and the Philippines, and Thailand. So clearly there is a de-dollarization agenda here, and that is one thing that is going to be almost guaranteed as you see BRICS continue to expand. It's a primarily an economic geopolitical alliance, and a big part of their agenda has been simply getting away from the US dollar as a means of settling their trade. And this is accelerated drastically following the 2022 invasion of Ukraine by Russia and the following sanctions and weaponization of the dollar. And this is a big deal because you can see in this data here from Statista, the BRICS nations now, as a percentage of global GDP, have actually exceeded the G7. The G7 sort of on the downward trend here as these developing nations expand their economies. The BRICS nations now account for, in 2024, estimated 35% of global GDP, whereas the G7 has dropped to 29%. So the more that the BRICS nations move away from the dollar as a means of settling their trade, it's going to have a big impact on the way the global economy functions. You can see here that China, the largest economy in the BRICS, this is an infographic from Visual Capitalist. It represents their move away from the US dollar from 2010 to 2023. The blue here is the percentage of their cross-border payments settled in US dollars. The yellow is the percentage settled in renminbi. Now, renminbi still counts for a relatively small share of global trade. However, China, one of the world's biggest exporters, the second largest economy in the world, they have been using much more of their local currency. Their bilateral trade with Russia, for example, they export a lot of finished goods to Russia. Russia sends them a lot of oil and natural gas, and they settle a significant portion of that in renminbi and yuan. Almost none of that is conducted in dollars anymore. And then this infographic also mentions the total percentage of global trade that is settled in these currencies. Now, these numbers actually add up to 200%, not 100%, because every one of these transactions involves two currencies. But you can see that between 2013 and 2022, the renminbi rose from 2.2% of global trade settlement to 7%, still massively dwarfed by the dollar, but that's a significant rise. And as I mentioned, the trend towards de-dollarization has really accelerated since 2022, so you can expect to see this number moving much higher. Now, the real problem here has to do with the U.S. debt and the U.S. exporting huge amounts of debt over the past several decades around the world. And this is the most recent data from the U.S. Treasury regarding major foreign holders of Treasury securities, of which China is number 2, by the way. You know, they've been selling off treasuries at a record pace. But if we just look at the grand total of debt held by foreigners, that's U.S. debt, Treasury bonds, you can see that that's been on the rise, and it actually in May hit a record high of $8.129 trillion, rather. So over $8.1 trillion held by foreigners, and that number continues to rise in absolute terms. But in total terms, relative to the total size of the U.S. debt, the amount held by foreigners, even though in absolute terms it's rising, it's hitting new records, it's on the decline. This is from a report called Foreign Holdings of Federal Debt from the Congressional Research Service. But WolfStreet.com, they have a better representation of it, I think, visually. This just shows in a chart the percentage share of the U.S. treasuries that are held by foreign holders. So that number has been diminishing, and there's less and less demand for U.S. debt around the world. The expansion of BRICS will almost certainly expand this trend. If we see, as we've seen, foreign holders such as China, they're dumping their U.S. treasuries, and as more and more nations adopt this trend towards local currency settlement, trying to get away from the U.S. dollar, it's not something that's going to happen overnight, but this is long-term a problem because the U.S. continues to borrow huge sums of currency. The debt is exploding, right? We've got $35.13 trillion in debt. Now, I mean, think about this. This is the U.S. debt clock. It was on July 26th, so the time I'm recording this is August 4th. On July 26th, the U.S. national debt crossed $35 trillion for the first time. Now, today, a little over a week later, we're at $35.13 trillion. So that's, in a very short period of time, a $130 billion increase in the debt. It's getting exponential, the rate of borrowing. It's absolutely exploding. And this is going to prove to be a huge problem, just as foreign buyers of U.S. debt are becoming less and less interested. The amount of debt that we are issuing, the amount of deficit spending that is requiring all this borrowing is absolutely exploding. And think about this. They're worried about the U.S. entering into a recession right now. We just got really terrible unemployment numbers on Friday's job report. Now, up until this point, we've been being told, this is the greatest economy in history. Bidenomics knocking everything out of the park, right? But what happens during a recession, right? Do deficits decrease or do they increase? Well, they tend to move up significantly because the government tries to stimulate the economy by spending more money. So if we were, in the greatest economy of all time and we're nearly $2 trillion deficit is what we've been running. What's that going to look like as we enter into this recession? Well, the amount of debt issuance is going to explode, and that's going to be a real problem. Just on Friday, actually, we saw a sell-off or a sell-off in stocks. We saw a big rally in the bond market. So this actually looked like people were buying U.S. debt. We saw a significant decline in the yield. U.S. 10-year note dropping over 4%, dropping down to 3.7% of the yield. So as yield goes down, that tends to indicate buying. The value of the bonds increases. The problem is that this had a lot more to do with, one, safe haven buying, because some entities may view the U.S. Treasuries as a safe haven in light of the sell-off in stocks. But also, this had a lot more to do with anticipation of the Federal Reserve intervening in these markets, slashing interest rates, and possibly buying up more debt. And that's exactly what is going to happen. I mean, also important to note that the U.S. dollar showed some significant signs of weakness, down 1.15% on Friday. The trend for the U.S. dollar is looking like it's going to be lower as the Fed intervenes here. And look, I mean, this is what the Fed does, right? This is a chart of the Fed balance sheet going back to before the great financial crisis in 2008. And what the Fed does when you get a financial crisis, when you get some kind of a debt crisis in the U.S., is they come into the market and they buy up a bunch of U.S. Treasuries. So they actually almost hold as much on the Fed balance sheet as is held internationally. What is it, 8-point-something trillion that foreign holders have? Well, right now on the Fed's balance sheet, you got over $7 trillion of mortgage-backed securities and U.S. Treasuries, and their balance sheet is likely going to explode as this debt crisis plays out, as international buyers become less interested in U.S. debt, as the U.S. dollar's role in international trade as a result of weaponization, as a result of the ongoing deglobalization around the world, sanctions, seizing of assets. The U.S. dollar, the debt rather, is going to be a lot less interesting to buyers around the world. So the Fed is going to be the one who buys it, right? I don't think there's any doubt of that. They've been doing QT since mid-2022 when they began QT and hiking rates to fight rampant inflation. But now as the U.S. economy enters into a downturn, deficit spending is going to explode. And the BRICS nations, again, are not only continuing to de-dollarize, but they are expanding their ranks. So this is going to be a real problem. And we can see that the Fed is likely going to have to intervene here and buy up the U.S. debt, because nobody else is going to be doing it. But interest costs are now over $1 trillion annually on the skyrocketing U.S. debt. It's an exponential move higher. And so what this all means is that there's going to be a lot more inflation. There's going to be a lot more dollar debasement. There's going to be a lot of Fed intervention because this is BRICS expanding, coinciding with a U.S. debt crisis. I mean, it's a perfect storm for dollar devaluation, and that is likely why, despite the fact that international holders seem less interested in dollar assets, they are very interested in gold. This is from the World Gold Council. You can see purchases of gold have been at record highs since 2022 among central banks around the world. 2022, the purchasing spiked. It's no coincidence that coincided with the weaponization of the U.S. dollar, the sanctions on Russia, the seizing of their assets. China increasingly concerned about their large exposure to U.S. Treasuries and their U.S. dollar their forex holdings. So you've seen the purchases among central banks exploding, and actually we just had the biggest quarter one in 2024 on record. Last year, you can see in Q1, central banks bought about 286 tons of gold. Well, in Q1 of this year, they bought 289. So it's the highest gold stacking by central banks on record for a first quarter. And that is a trend that is going to continue. That's why this BRICS expansion and de-dollarization will have a big impact on the price of gold and silver. In fact, this central bank buying is likely the primary contributing factor to the price of gold hitting record all-time highs. Gold now trading close to $2,500, and that trend's not going to stop. So, the BRICS nation, the BRICS story, it got a lot of coverage last year. The BRICS talking about an alternative currency to rival the dollar, inducting new members. I think it's kind of been put on the back burner since that time, but it's important to keep in mind that this trend is continuing. I mean, just this week, we've got a $400 billion country. I mean, that's the size of the GDP of Malaysia, signing up to join the BRICS nations. And this is likely a trend that is going to continue. So leave me a comment down below to let me know what you think this is going to mean for gold and silver, for the US dollar. If you haven't subscribed to the channel yet, please do smash that like button, subscribe to the channel, and I will catch you next time. Stay safe and happy.